What's going on, guys? FX Brawler here. This week I want to make a video about a follow-up of my last video about my series next week in the markets, because I want to explain how I put the ideas that I put out weekly into practice and into action. And I also want to talk about a few patterns that I look for, because lately I've been seeing a lot of videos popping up about ICT and SMC and all these concepts, and basically what I'm seeing is that a lot of people say that retail uses technical analysis and it doesn't work, and it's not mechanical and things of that nature. And I could not disagree more with these statements. Technical analysis has been around for decades and decades, and there are tons of traders that are very successful with it. And today I want to share with you a few of those patterns that I trade that are consistent for me and that I look for, and that give me a good risk to reward ratio when I see them. So let's get started. So the first pattern that I want to talk about is a break of structure followed by accumulation. And what I mean by that is that you will see, sometimes you will see like a structure that makes higher highs and higher lows, and then from there you can trace some type of channel, and sometimes it will break out of that and start to make a lot of moves around the resistance, and this can be reversed as well. It could be on the other side. It could break and then start to make a lot of movement around this, and this is called reaccumulation. Basically, it's when a move goes beyond an important resistance or support and then stays there. And what this indicates is that there is a lot of strength, that there's a lot of buying pressure in this case over here, and price is getting sustained by the demand of the market. And sometimes it takes a while. It depends on the time frame you're looking at, and sometimes it takes a while before anything happens there. But once you have a breakout of that, then it can be a good opportunity to make some money, because there is some force that is released, and it creates a move that is relatively fast. And there are two ways of trading this. In my experience, the first one, and we're just talking about this zone here. The first one is to trade the range. So let's say you have this here. You could place some orders to buy, and sometimes it's going to be lower like that. That could work as well. So all you do is you trace a line, and then you figure out, okay, if it goes there in that zone over here, I will look for opportunities to buy the bounce. And this is what I call a bounce trade. And the other way to trade this is to trade the break, what I call a break and retest. And I'm sure I'm not the only one that calls it like that, but basically, when it breaks out and it comes back, that's another opportunity where you can have a fairly tight stop and go. Let's say this is a 4-hour chart. You could go on a 5-minute chart and then wait for some type of indicator, or could be anything. It could be an RSI, a stochastic. It could be price moving above moving averages, like whatever you fancy. And then once it starts to turn, then you get into the position and you have a fairly tight stop. And if it does go, then it might go very, very far, because the small pattern that you're trading there is based off of a longer term pattern. And this is how I managed to get some high reward versus risk ratio trades, because I go on smaller time frames and I wait for opportunities like these. So that's one setup, and it can take many shapes. Like I'm gonna show you this one related to the pound yen, but also the euro was doing like a downwards setup similar to this, and then from there it broke out and then started doing some accumulation here. So let's go take a look real quick. So you have, this is the structure. The structure is a downwards channel. And excuse my my voice today, I'm under the weather a bit. So we have a downwards channel which gets broken out, and as I was explaining it was doing a pennant, which is a continuation pattern, and in this case it's what I considered reaccumulation, basically. Difference between accumulation and reaccumulation, to me, accumulation is when you have a downtrend and then at the very low you start to see price going in a range. To me, that's accumulation. If it gets off of that low and then starts to mess around higher, then it's reaccumulation. So now we have a low which breaks out of a previous structure, and then you have reaccumulation. And then I was explaining that I was hoping for two things to happen. So the first thing is, let's say you have this shape, the pennant. Once this is traced and you have your two highs, your two lines that correspond to the highs and lows, the first thing I look for, and the one that I find the most reliable and satisfying, is when there is a break on the downside and then it goes up, because this zone here signifies manipulation, because all these all these lows have a bunch of stop losses below them, and it means that there is a supply in that zone. So when price gets lower like that and then it gets back in, what it tells me is that there is a whale somewhere, or the big players, the smart money, have had their orders filled. So by watching this and expecting this, I'm hoping to be right behind them. And the other way to trade this is to trade the break and retest. Because whenever you have a break, you usually have a point where this resistance now needs to be tested. And this is the second point where I look for entries. And I was explaining this a bit last week, but I didn't have the opportunity to buy it in that zone, unfortunately, but I did get the break and retest, which is right here. So the break and then the retest, and then this was my buying zone. And now this was the my prep was done without any emotion. Like I did this before the week, and now I'm still in that trade. I did take some profits off the table, but I'm still in it because it was a long-term setup. So this is one example. So we have the break and retest. The second example I want to go over is this one here. The pound yen I've been talking about for weeks now, for maybe over a month. And I was explaining that I'm expecting price to go and test. Let's go on a bigger time frame. It's going to save us some time. I'm expecting price to be attracted to this level over here, which is a previous high. So it may or may not happen. I don't know, because we're seeing quite a bit of rejection, but on a smaller time frame, it is reaccumulating. at the highs. So we have a pattern, a structure, but now we're accumulating at the highs. And I don't know if now it's going to break on the downside and do some a really great downside move, or if it's going to break on the upside. But if I see a bunch of accumulation like that at a high that used to be a point of rejection, I go, I think we're gonna go higher. So let me see if I can find some type of trade. So what do? I go in a smaller time frame and I look for another structure. So right now we have a structure over here. This would be 1 point of breakage. And the other point is this zone over here, which is the bottom of the pennant. And I had traced this this zone a long time ago, but it broke through and then went back up. And now it looks like it bounced off. It's not. It's still possible that it's going to keep going on the downside, and then break on the downside or bounce off of that. But because of the fact that it's accumulating at the highs, I'm looking for this with keen interest, because to me this looks like a buy. So this is another example of what I wanted to talk about. And the other example of potential trades that I saw last week was a straight bounce and like a rejection zone. So we had this beginning of the week. I think it was on Sunday or Saturday that I did this. The market was closed and we were around down here. And it went back again to retest it. And we saw a lot of rejection looking at these candles. And then it broke on the downside. So I shorted the shit out of it. And now I'm in profit. And I took that trade based off of this pattern here, which we have a nice support zone. There is another one here, which is something that I need to pay attention to, because there was rejection here. There was a candlestick pattern that suggests a bullish movement. And now we have rejection here. So we're going lower, but I don't know if it's taking a swing before it penetrates on the upside, because this level is very obvious. So there's got to be like a ton of stop losses at this high. So you got to keep that in mind, that if it reverses, it's going to break out like crazy and fast. Forgive me, I had to cough a bit. So all this to say that technical analysis is alive and well. What my goal is with this video is to explain that you can make plans ahead of time, identify zones where you have some potential for bounces, for breakouts and retest, for manipulation where the stop losses get hunted and then the move goes in your direction, and price moves from structure to structure. The shape of those structures is never exactly the same, but the same patterns occur over and over. But you need to know how to trade several types of structures. So that's what I wanted to share with you guys today. I'm under the weather. I'm gonna try to stop using my voice, but I wanted to share that with you guys this week. So let me know in the comments if that was helpful. So I'll see you in the next one. Peace.